Welcome to Trading Lounge and the US indices for the 11th of February, and on the 4-hour chart starting with the S&P here, in a nutshell we've been looking at all of this as wave 1, and then we're looking for wave 2 to pull back into the 50-60% retracement area here. So it's quite a deep correction that we're expecting at this point. We've also there's the holiday in the US, the president's holiday for the Monday. I'm not sure if that runs over into the Tuesday or not. I have to double check on that. But point being that volume could be low on the coming into this Thursday, Friday sort of area. So that might assist the drop in the market. So with the support, we can see that we've got this consolidation here, and that would also be the 50-60% retracement level from the low to the high here roughly. Also this consolidation area over here will play out as well. So the 3850 and the 3800 would be pretty good support areas for any move that was to the downside. If we do make a new high above here, then essentially we need to be long at that point. Yeah, so let's go in and check this out. So on the hourly chart, so we're looking for 5 waves up. The alternative count was to have wave 1 coming to this particular point here. So that could be still valid as well, and the market could just creep higher from that point. We moved the stop up yesterday, so we've been stopped out for that. So I'm going to remove that now, and we don't need that there either. And so in a bit of a nutshell, what we're considering is for this wave 1 up here would be looking for an A wave, a B wave and a C wave. Now this particular pattern for wave 2 should be a zigzag, and a zigzag is just the A, the B and the C, and a zigzag is also called a 5 structure, 3, 5, so a 5, 3, 5 structure. So that's what we're looking at here. It's probable that this move down here is just wave 1 coming down here and back for wave 2 and 3, 4, 5, and then a higher retracement area here. Bit of a tricky one to trade. You could, I mean, if I was going to trade it personally, then I would trade this wave 3 here, and that's what I want to talk about here. I might do that on the 15-minute chart, so I can just explain, or maybe even the tick chart, just so I can just explain that a bit clearer what I've done here. So now, first of all, if this top is going to be taken out, right, then we can go long from that point. That's simple as that. Then we'll look for the second high here for this. So in this instance here, we've got this labeled out here a little bit. So we can look at this as wave 1 and 2 here, and 3, 4, 5. So if we're going to short this, we want to be taking profit at the 3850 area through here. And the thing is that this move up for wave 2 here would be an A wave, a B wave and a C wave. Okay, so we can go and have a look at that in a moment, a bit like this here, the A, the B and the C wave here. Now this A wave here, that will be in 5 waves here, this first move here. So we can go short under that because the market shouldn't breach that. If it does breach that, that means that we could be coming down further. Now this little move in here is also in 5 waves as well, so we can short that there at 3900, 3903, and it's not such a good idea to short below a big number, but perhaps a smaller position on that. And yeah, so in a nutshell, 3900 is a retested resistance with a classic trading levels pattern on the bearish side. There's a couple of ways that you could look at that. Normally the market will move through it and come back and test it. Now it could just fail at this point and come back down, so then you'd be short here. Sometimes it goes above sometimes it's just nice and clean like this here, so always waiting for the first low below the level. But in this case we want to get a position up here on this, and then we can also short it down here as well. So allowing that to come down and allowing the retest to take place, that's the important thing. And then you've got that low to work with, and then that low there, so that's the basic classic trading levels pattern in the other way. So let me just go to the tick charts. Where are we? 100 ticks. So what I might do, let me just find my, might be easier, that's 100 ticks, this is 5 ticks, so just a little bit more. What I wanted to point out here was this move here, so we could look at all of this as 1, 2, 3, 4, 5, 4. This is all of wave 1 here, all of wave 2 here, all of wave 3 here, an A wave, a B wave, and a C wave for wave 4, and down for wave 5. Because we've got 5 waves in this move here, well, technically, we've got 5 waves in the opposite direction of the previous trend. If you get that, then if you get the 5 waves in the opposite direction of the trend, then you'll get a counter trend, and then you'll get one more. So in this instance here, I've just got a simple A, B, and C wave here, but we know that we're looking for the market to come down further. But I just want you to know that we need to be long above here. And once this low, once this finishes, and we'll talk about this here in a moment, once that finishes, we can, and drops down here, then you can look to go long at that point there. But we're in the 1 hour chart, we're looking at this as wave 1 and back for wave 2, but I just think we need to be a bit mindful of a shorter correction as well in this case. So, but that B wave is where you'll need to go long again. You may be able to get a better position of that, and we may be able to pick that up in the morning and talk about that in the next session. So what I want to talk about here, I know folks don't need a lot of detail, but so this move here is essentially there's well, there's wave 1 and 2 in here, and then this is all the 3rd wave here, this is the 4th wave, and this is the 5th wave. So this is the little A wave here, and then we've got the A wave, the B wave in 3, and the C wave here. In fact, that's part of that, which I don't quite understand. So something that I don't understand, there's a wave there that I don't understand. Still, from this point, we've got 1 and 2 here, 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, 5th. So we've got wave 1 here, we've got wave 2 here, and probably wave 2 over to this point actually, and then we've got, I'd have to look at all of that as wave 3 there. But what we could say is that if the market comes down above this, if it comes down any further and overlaps that level, close enough, if the market comes down through here, then we've got a top in place. But otherwise, we need to look at this as the A wave, the B wave, and the C wave here. The C wave should be in 5 waves of 1 and 2 and 3 and 4 and 5 here. And then down from that point. If this is overlapped there, then we've probably got the top in there. And then I would have to look at something weird like this being wave 1 and 2 here, and 3 and 4 and 5 here, or something else, you know, some little error, another mistake that I've made. But we seem to be impulsing up there. So I'm thinking one more little high, and then rolling over from that point, so that will give us that wave B there. Okay, but if this comes down deep into here, then you know that it's over at that point. And also what I wanted to do is talk about going short. So I talked about going short here. Because this is the impulse wave here, and this is the corrective wave, we shouldn't technically, if it was going to be bullish, then we shouldn't be breaking that. So if it does break that, we need to be short at that point. We could also do the same here as well. It's a little bit above the level here, so maybe a smaller position. Yeah, and you could probably, let's just say that you make another high here, right? You could also do the same here. You could short in this place here as well. Or if you had the intestinal fortitude, you could also wait for 5 little waves up here and then short up here as well, based on the fact that this move down here should be in 5 waves, but you'll need to check that for yourself. Yeah, that's it. So that's the turn that I'm talking about. We'll see how that plays out there. That's on the 5-tick chart. So that makes it a little bit, that's 100 ticks. So we can put our things in here. So you could probably even go this way with it as well and short through there, but we're talking about shorting through here. Many roads to Rome, so to speak. We can also short through here. If that does make a new high there, well then you can, that will be the low. You can also short through there, or you can short at the top there as well. The other way, the safe way to trade this is the 3900 here, and the classic trading levels pattern in a nutshell: the arrival, the reaction, the first low below the level, the retest, and then down again from that point. So that's also doable at that point there. Rightio, so I don't want to take too much time with this video. So that's the S&P. So I want to move that out. The NASDAQ, I counted a little bit different. So from this wave 4 here, I could count 5 waves up here. As you know from yesterday and the day before, we've been counting them up. I won't go into that right now. So I could count this as wave 1 and wave 2 here. And then I was counting all of this as wave 1 here. So in this case here, if this top is taken out, we need to be long. Okay, that's step 1. But otherwise, we'll either have an A and a B and a C down to here and then push up, or we're going to have this as 1 down for 1 here, back for 2 here, 3, 4, and 5 here for that, and then the ABC pattern here for that, and then another 5 waves coming down here for this here as wave C, and then moving up from that point. I wouldn't turn bearish in this whole market unless the 13,000 became the retested resistance at that point. Okay, and in that case we would look at this as blue wave 3 here, blue wave 4 here, and blue wave 5 sitting here, and then I would be forced to push this count into the S&P count, which I'm a little bit reluctant to do, because when I sort of see the Russell here, just for a moment, I know we had a look at this yesterday, and we counted this up here as 1, 2, 3, 4, 5 for 1 and 2 here, then 1 and 2 and 3 and 4 and 5 for 1 and 2 here, and then 1 and 2 here, and then 1, 2, 3, 4, 5 for the third, fourth, and fifth here for the third wave. So I'm still waiting for this to push higher here. I know we got an impulse wave here, so we could actually just have a little wave 4 here and then push up here for the Russell. So a bit of a different scenario altogether at this particular point. Starting to look very corrective here now, isn't it? So there's a short trade there. So anyway, I want to get this video out a little bit. Okay, we're just going to have a quick look at the stocks. I haven't looked at them this morning since yesterday. So this is Tree here, Lending Tree, and just tracking along here with this. I'll better put that over there. So for this here, I said that I would pull this apart, but I haven't done that yet. But it doesn't really matter. I just want it to top out and pull back, okay? And then we'll become interested in it. We already have a position in it. We're keeping the stop out of the way, but it's on this side of the. Once that top's in place, we want to be on this side. That's where my attention will be, because we'll be looking for wave 1 here and A, B, C here. So we'll be looking for a strong third wave to the upside there for that. And means that we should be seeing weakness in these other stocks to a point. This is Facebook here, just 100 ticks. So here we counted from the low here, we count there's 100 ticks of 1 and 2 and 3 and 4 and 5 here for wave 1. Didn't really get the ABC, but we have pushed up higher through here. So I'll need to reassess that. This is not correct, this particular count. But it has pushed higher. I think we need to push this up here now. I can see where the errors of my way. So this wave 5 here, because I had 5 waves in here, but we'll have to look at that as wave 1, 2, 3, 4, and 5 here. So we're going to have to move this over to here. And now we're going to see this ABC pattern play out here for this. So I won't apologize for this one, because I did all the right things. It's just that the market expanded up further, that's all. We don't need that. Or you might be long there, doesn't matter. But I'm still going to keep the stop out of the way, because we need to accommodate this move down through here as wave C before moving higher here. And we'll also look to copy that. We'll put that on top there. But also too, we'll probably drop that down onto the B wave here, and we'll try and get another better position in that market. and square is next here. So you may have been long at the 230 area through here. I can see that we've got wave 1 and 2 here, and maybe 1, 2. This is definitely a fourth. I don't know if we've got, this could get a bit uglier here, but we should see another move to the upside. So I will just draw a little move down and then up at that point there. I'll check that out a little bit later, but yeah, start to look to take profit at this point. We're on lower volume now as well for that. And what's next? Might have to do the same with Apple as well here. So with Apple, we've got this trend up here. We've been looking for wave 3 and 4 sitting here. So we've been looking for the first impulse wave to the upside, which I'm going to have to adjust now and put that over to here. And that means that we'll be pulling back into, this is also on 100 ticks, so we can pull that down to there. That's going to pull into here for that. So the 133, we'll see that pull back into. If you're long, we're still going to keep the stop out of the way here. What's that? That looks like that's corrective. That's 1 and 2 and 1, 2, 3, 4, 5 and 4. So this, we should see one more. Well, it couldn't just be an A wave, a B wave, and a C wave here in those 5 waves, or this wave 4 here. If it breaches this low here, then you know that we're going to have, then you can start counting 5 waves down here if this is breached here, but not to go short there, of course. We won't do that. And Alphabet. So with Alphabet, we've been looking at wave 4 here with 1 and 2 and 3 and 4 here, and then counting up here as 1 and 2 and 3 and 4 and 5 here. So this is the most conservative view that I could possibly have with this market. So there is space for the market to go up, but as I mentioned before, we need to count from here. We need to count past these 5 waves here that we've viewed here, and yeah. So if this top is taken out, then we know that we're going to be going higher at that point. It does appear to be corrective in that space there. So that appears to be corrective, but we'll just allow it to play out a little bit. We'll see if we pull back, because it really hasn't tested the 2000 here. This is really just the first high above the level for this. And the Amazon here is, we've been looking at this as wave 3 over here with an A, B, C, D, and E here for wave 4, and then wave 1 and 2, and then looking up for 1 and 2 here. Now, as I mentioned before too, this particular move here is in 3 waves here, so it can be corrective. So that's the risk that we're holding, but at the same time, it shouldn't drop below this low here. Just get rid of that. Shouldn't drop below this low, because we've got 5 waves in here. If it does, then this wave 4 is going to be pushed over here somewhere, and we're going to have to take a loss on that particular position in here. Otherwise, if we look at this correcting with the other markets and then moving up here, we're going to be looking to build that position. As simple as that. So yeah, I think that's sort of okay at that point. And this one's Tesla. So we're going to have to rearrange this one here, or maybe not. We'll see, but we can't have wave 2 sitting here anymore. We can bring wave 2 down to this point and have it as an A wave, a B wave, and a C wave here, but it doesn't look like the case. If this low is going to be breached here, then we're going to have to rearrange this, and we'll have to go back to our original count, which was having wave 4 sitting here and wave 5 sitting here, with wave 3 here, and then coming down for wave 4 here, and wave 4 will be is how this is going to play out, unfortunately. Wave 3 here. I mean, we talked about this before. It looks like it's becoming the case. I mean, Tesla's shifting that money into Bitcoin, changing the balance sheet has that looks like it's 1 and 2 and 3 here. So we'd still need to see 4 and 3 and 4 and 5 to come into this space, and then we'd have to go long over this point over here for that. Anyway, we'll see if that's the case, but that would be that looks like the bias now for that to play out like that. So that's affected, shifting that 1.5 billion into Bitcoin off the balance sheet of Tesla has weakened this here. So yep, that looks like the case. Alrighty, yeah, I'll just leave it all at that. That's where we are. So I'll see you tomorrow. Alrighty, thanks very much. Cheers.